Good afternoon, everyone, and welcome to SECO's half-yearly results and business update for 2022. Before I hand over to your host today, please be advised there will be an opportunity to ask questions at the end of the presentation. In order to do so, please use the raise hand function on your screen, or for those dialing in, it's *9 on your keypad. I now have pleasure handing over to SECO's Chief Executive Officer, Massimo Mauri. Please go ahead, Massimo.
Thank you very much. Hi to all, and thank you for being here. I think the first half of this year was tough because we execute in a very difficult market and environment. Despite it, we show result that proven by fact a solid execution into our business with a good organic growth in the range of 60% and in the range of 50% the growth in a like-for-like basis. The EBITDA grew in a very significant way up to over 20 million. And I would underline also a strong acceleration of the revenue in the second quarter of the year and the EBITDA as a consequence. We still invest in our business. In fact, we invest around 10 million in additional stock to support our future growth. This is due to the shortage component situation. Despite it, we started generating cash. We generated over 3 million as a free cash flow in the second quarter of 2022 due to the condition where we operated. I think that is a significant achievement. The gross profit margin is stable, is in the first half of the year, and again, this is affected by the shortage, and despite it, we was able to improve by 80 basis points quarter by quarter in the second quarter of this year. The Clea business grew better than expected. Also is growing and ramping up faster than our internal estimation. This is great because proven in my mind that the shifting and the evolution of our business model from an hardware company to an hardware software company is working extremely well. We was able to make around 10 million in revenue, over 10% as a total revenue in the first half. And we have also significant additional growth in the future coming from new customers that are choosing Clea as IoT infrastructure, IoT AI infrastructure. The order backlog is up by 70% in same perimeter versus 1 year ago. It's now in the range of 174 million, providing us all the visibility already on the entire year. This is the reason why I am in a position to fully confirm our guidance, and also an increasing into visibility in the 2023, showing that the growth that we have in mind still there. I was over the phone and in meeting with a lot of CEO of our customers during the last few weeks, and actually, they told to me the business is growing, continue to grow. They have a strong demand of product and solution. The digitalization trend continue. So all the KPI that we are noted don't show to us any kind of slowdown in our business nowadays, but we will continue to monitor them very carefully on weekly basis. So entering more in details in the second quarter of the year, as you can see, with a comparison with the same quarter 1 year ago, well, you can see a big improvement into all the major KPI. The growth of the sales is impressive in my mind. I think also, and is important to outline that we grew in the gross profit margin, despite the fact that the last year wasn't not affected yet from the shortage, so we was able to improve around 80 basis points the gross profit margin due to mainly the contribution, the bigger contribution of the software business. And also the EBITDA is jumping, returning up to the 22% in the second quarter with a good contribution also from the operative leverage. But what mean basically for us growing is making something that we did an analysis in a quarter by quarter, looking here, you can see from the 2020 up to now, the quarter by quarter revenue. And what you can see on the slide is that we was in the range of 29 on average in 2020. We were at 36 million, roughly speaking, on average in the 2021. We are now around 47 million in the first half of the 2022, and I would expect to see it further growth in the second half of the year to achieve our target. Bottom line, you can see a 20% quarter by quarter sales growth year per year, 35% of growth in EBITDA, and 3 million plus of cash generation in the last quarter. This is the snapshot of the results. I think it's important also to underline to you that we act in a difficult environment due to the shortage of the components. What it means for our business, it means that we performed 3 times price increases versus customers in the last 1 year and a half. We did over 20 redesign of product, high runner, which is equal approximately to 30% of our total high runner product. It means that we redesign them, changing components, putting a lot of effort in find out components on the supply chain. We wasn't able to ship all the backlog. In fact, we end of the first half, we still have 6 million that of overdue backlog, meaning backlog that we should ship in the first semester, and we wasn't able to ship. We invested 10 million of additional inventories, and in this such of environment, we was able to execute the launch of Clea, which is going extremely well. We was able to grow the business in a very significant way, and we was able to, in some way, defend our gross profit margin as a consequence to continue to significantly grow into EBITDA margin. I would like, this is a summary of the first half of the year in my mind. I would like to hand over to Lorenzo that can provide a deeper analysis of the major KPI of our first half performance.
Thank you, Max, and good afternoon to everybody. Well, financial highlights of SECO Group in the first half of 2022. As already Max mentioned, we recorded a really important growth of sales, 125% respect to the same period of 2021. We increased net sales in absolute term of 52 million, But what is more important for us is the speed of organic growth and like-for-like growth that you can see is really, really important on both the KPI. This growth is for sure driven by a really solid performance of edge computing, but more important for us, the performance of Clea business that reached close to 10 million in the second half of 2022, showing a great rollout of our solution across our customer. Another point that I would like to mention regarding sales is for sure the integration that is proceeding really well across all our acquisition realized in the last in the last semesters, that contributes for sure to reach these important results. In terms of gross margin, obviously the speed of growth has been similar to sales in terms of half-on-half growth. But what I would like to point out is the profitability at gross margin level. We are just 1 percentage point below the first half of 2021, but we are comparing really two different situations. Actually, the first half of 2021 was not affected by shortage. We reached these important results thanks to two tools. The firstly, Max already said these are price increases that we need to do in order to rebate the increase on components on our customer. But more important is the impact of software that, as you know, has an higher gross margin with, so that counterbalance the profitability that we have on edge. So good performance in terms of gross margin for sure. In terms of EBITDA, we reach a good performance on this KPI. Also at this level, actually, we more than double first half of 2022 respect to the same period of 2021. What is really important is in relative terms, we are just 1 percentage point below the level of the H1 of 2022, but again, in a really different situation. So shortage with against non-shortage period. But most important for us is the acceleration of profitability at EBITDA level in Q2 2022. Actually, we closed the Q2 2022 with 22.5% of gross margin, respect to 20% in the first quarter of the year, showing that even in this difficult situation where there is shorter, SECO has been really good in navigating in this complex market scenario. Regarding net income, we grew a lot also at the net income level. We more or less doubled the net income in the two periods that we are comparing. The growth is less than proportional respect to sales, because we have 3 million higher in D&A, of which 2 million comes from SECO Northern Europe, previous Garz & Fricke, that, as you know, was not included in the consolidation perimeter in the first half of 2021. And the other item is for sure financial expenses that accounted for 1.9 million in the first half of 2022, while the figures was close to zero in the first half of 2021, because the company was cash positive before the acquisition of Garz & Fricke. Well, let's go a little bit more deep on our sales performance. Here again, strong performance of edge computing that doubled its results compared to the first half of 2021. Great performance of Clea that grows 10 times respect to the same period of the year before. So great launch of Clea over the market. For what concern our performance in terms of sales breakdown by geographic area, we can see that we are growing at a really good speed, more or less across all our geographic area, showing that SECO has a quite good diversification of sales across geography. The same comments we can do for sure regarding the end market, so the vertical on which we are distributing our products. I would like to make a focus on the vending and distribution sector that is growing at a really important speed, recording a strong performance on both, let's say, area, food vending business and tobacco vending business, on which we are particularly strong in Germany, thanks to SECO Northern Europe. Well, for what concern our performance in terms of our most important indicators in terms of profitability, so adjusted EBITDA, again, 21% of margin respected to 22 of the same period of 2022. So just 1 percentage point in decrease, but again, in a really different scenarios, shortage and a shortage period. Again, what I would like to stress again here is the performance in Q2 of 22, where we increase EBITDA margin of 2.5 percentage point in, unfortunately, a market in which the shortage is continuing. For what concern EBITDA, here we showing you adjusted EBITDA, that is for us the performance that measure actually the results of our business. We adjusted the EBITDA for two factors: the actuarial value of the stock option plan reserved to the managers, that counts for 1.5 million of the overall adjustment. Then we have just 300,000 of M&A transaction cost related to the Canozzi Digital deal. Well, a comment on our most important indicators in terms of balance sheet, actually KPI, the net financial position. We close the semester with a net financial position of 122.6 million, in an important improvement of 3.2 million respect to the net financial position of the first quarter of 2022. This is a really great results, actually, in a context when the shortage is continuing, and these results, the driver has been for sure our performance, our P&L performance for 7.5 million, and the good management of net working capital that was decreasing in the second quarter of the year by 1.1 million. Another point that I would like to highlight on these slides that is not reporting here is it is reported between the on the right of the chart, is our derivatives on our balance sheet. As you know, we did a full hedge of our financing agreement that we taken in order to finance Garz & Fricke. Due to the trend of the interest rate, and in particular the 6 months Euribor, these derivatives counts now for a really significant and positive amount on 9.6 million. As usual in hedge accounting, this amount is not included in the net financial position and is not included either in our P&L because it's recording against equity. Thank you very much, and I pass the speech again to Max.
Thank you, Lorenzo. And I think what's next after the first half? Well, I see the trend of growth that we posted continuing, and I think also the key driver, which is the digitalization and the digital transformation, still there, is a driver that is recession resilient, because it's a secular trend that is basically changing almost all the process in the industrial business. And as a factor, we still see very big new projects that are coming from new customers. So in the digital signage, in the industrial field, in the smart factoring, recharge station, digital voting machine, consumption monitoring, many others, we still have a big demand of product and solution, and we are getting a lot of traction with a lot of big customers around the world. That is providing us an increasing in visibility also in the 2023. This is proven by the order backlog, as we discussed before, but not only. This is also proven by the design win. The design win and the order backlog are the two key indicators to look which could be the future trend of growth of the company. If you look at the backlog, well, the backlog is up than 70% versus the previous year at the same parameter. That is driven by a huge growth into all the region, with a special focus into EMEA, APAC, and US, and is driven by existing customers and a lot of new customers that are starting now, entering into mass production, and they will be there for at least 5 years due to the life cycle of their product. But it's very important also to look and make an analysis on the design win. The design win on the edge computing business are well above 80 million euro as a total value. They are well spread into the 3 main regions where we are acting, and across many different kind of verticals. This is also showing a good contribution, which is in the range of 40–45% of new customers that are coming, starting working with SECO. And they're really happy to see customers in a vending machine, in industrial automation, in voting machine, in smart city, transportation. So a lot of different customers with new solution, and most of them are including Clea. About Clea, where we are? Well, now we have already over 100,000 licenses under contract, and we will progressively put them working on quarter by quarter increasing, and we have over 200,000 licenses close to be contract. I would assume that will be under contract, a good portion of them by the end of the next quarter. And we have a huge pipeline driven by over 50 new customers and over 500,000 of devices in negotiation. Of these new customers, I would like to mention a couple of them. One is a very big and international customers that is choosing Clea as an IoT AI system for their solution. They have a lot of solution in the world of consumption of water, vending machine, all this such of product. And another big this customers is a US-based customers, and another big customers, which is a German customers, is visited us last week. They are a leader in the industrial automation area, and they will start soon to work with SECO on a big Clea project, and we are very proud to have this such of high quality customers on the back also for our future. On the industrial IoT Clea side, which came from the Camozzi deal, well, we are finishing as planned the porting of the first solution, which is almost ready. We will be launched by end of September on the market. And the good news is we already got 3 big potential early adopters where we are in deep discussion with them in the test analysis. And we plan to launch also the Clea Smart Factory version fully dedicated to the industrial automation side by early January 2023. I was over the phone with Mr. Camozzi before the call, and our partnership is solid like a rock. Is introducing, as he promised, the SECO to new customers. They need to have a hardware, software solution for their digital transformation. So Camozzi is not only a provider of solution that we acquired, but it's an important shareholder that is supporting the company long-term speaking, and also a customers, an important customers. We are working on many projects for them, and also an important business partner because is providing us a lot of new customers. Well, in SECO Northern Europe, we did a lot of job actually accelerating the growth path of SECO Northern Europe up to 22% of the net sales in the first half. But we want to further increase the growth and fix a lot of things inside the company to enable us to a long-term successful growth. This is the reason why a few months ago I called a good friend of mine and a very outstanding manager in this market, which is Dirk Fistel, former head of Advantech business in Europe. I know that Dirk is on the line, and I'm very happy to introduce you to Dirk and to hand over to Dirk for a short presentation. Please, Dirk, go ahead.
Thank you, Max. Can you hear me okay?
Yeah.
Yeah, once again, good afternoon, ladies and gentlemen. Yeah, my name is Dirk Fistel. As you might have read, I really have more than 30 years experience running global businesses in the tech industry. I've been management board member of Kontron, ADLink, and also my latest assignment, the managing director of Advantech in Europe, but also did run in parallel the largest business unit in Europe with 550 staff and more than 400 million of total revenues. From my perspective, I think, as Max has pointed out, we know each other for many, many years, more than 15 years. During my term in Kontron, I think we match-made and worked on an acquisition. And why I'm joining SECO, I think, is a very easy question. I truly believe that the paradigm shift we see here in Europe, that customers are looking for more European-centric supply chain and R&D and manufacturing capabilities, is a perfect point to really build a European-centric global player, to really work on a full-scale end-to-end solution portfolio. As Max has pointed out, Clea is a very unique software industrial IoT AI solution in this market. We have all the resources in-house and can really run full scale support to local customers out of own resources and keep the value chain inside of SECO. On the other hand, we have seen a lot of difficulties of other companies matching European jurisdiction as data privacy and GDPR laws are extremely complex in the industrial IoT environment, and as a European player, we are well positioned to gain this business driven by the digitizing of business flows.
Thank you very much, Dirk. I noted that someone is working behind you, which is definitely good.
I'm at the airport. Excuse me, the noisy environment.
No problem at all. Thank you very much for taking the time to be here. If you can mute yourself, we will continue our discussion. Thanks again, Dirk. And we will find another occasion where you will not be in an airport to have a call. So what's happened in August, this August, because that is a sort of game changer in my mind on the software side of our business. So there was a public announcement where Google basically communicated to customers that is gonna dismiss all the IoT services by end of August 2023. Why this is so important? Because there are a lot of customers, bigger customers, that now are looking for another supplier of IoT software solution. Well, many of them contacted SECO, and the reason why is because we have a solution and we are an IoT company. So we are very focused in deliver this such of services long-term speaking, which is not completely true after the Google decision for company like Amazon or like Microsoft. So many customers also at very big dimension are selecting company like SECO as a partner for their IoT AI infrastructure, which is so important in the next couple of years because it will provide additional and unexpected point of growth for the Clea business. Another important point for the future is for sure the fact that we are ready to put in our pipeline a lot of solution dedicated to AI, because we strongly believe AI will be another game changer, and we are in a very beginning of something where AI will basically change all the process, providing a lot of benefits to customers. What it means? It means that customers will be in a position to ask to have a lot of capacity in processing data. And customers have two options. One is to process this such of data in the cloud, and the other one is to process the data into the edge. Well, apart of the real-time solution, if you need a real-time, you need to stay on the edge, because going in the cloud, you will have latency, but cost-wise is 5 times better to stay on the edge versus in acquiring virtual computing on the cloud. This is the reason why SECO will present, starting from January 2023, a full set of new edge performance solution, which will be add-on. So something that will be inserted in a normal product like an add-on for all our customers dedicated specifically to AI accelerator. That is important because it will provide additional opportunity to grow our hardware business, and from this kind of business we can easily have as add-on the Clea solution. Well, this is basically the end of the presentation. We can start now with the Q&A section.
Thank you, Massimo, Lorenzo, and Dirk today for the updates. We now have an opportunity for questions. As a reminder, if you would like to ask a question, please use the raise hand function on your screen, or for those dialing in, it's *9 on your keypad. Once your name is announced, please unmute your line before asking your question. Thank you. So our first question today comes from Anna Frontani from Berenberg. Please unmute your line, Anna. The floor to you.
Yes, hello everyone and good afternoon. I actually have two questions. So the first one, I appreciate that Max already touched on this, but if we could maybe get a little bit more color on the sustainability of the top line trajectory, what does it make you so confident that there will not be a normalization on the top line beyond 2022? And also in which sector or category do you see the biggest opportunity? So that's the first question. And the second one is actually on the outlook for the shortage of electronic components. In previous earnings call, you mentioned that we should start seeing the headwinds normalizing from Q3, Q4 this year, also thanks on the mitigating actions that you have took. So I was just wondering, is this still the case, or do you have any update on this? Thank you very much.
Thank you, Anna. So let's start from your last question about the supply chain. We started already to see improvement. Unfortunately, the improvement is slow, but we are continuing to observing them. We plan to be without shortage somewhere in the beginning of the 2023. So we will see improvement during the third and the fourth quarter of the year, for sure. But to observe a normal situation, I would suppose we should wait first, second quarter of the 2023, where we see a full normalization of the market without any kind of impact due to the shortage. At that point, we will see the level of inventories starting going down and the level of cash generation, of course, improving a lot. Recovery into gross profit margin hardware-wise, so a lot of positive effect. If you think that we missed the 6 million that was already in the backlog in the first half, well, this 6 million basically means that potentially we could close the book at 100 million already in the first half with at least 2.5 million more in EBITDA. So I think once the shortage will be over, we will see a lot of positive impact on our business. Your first question is very simple to me, because we have a lot of new customers in many different kind of sectors. I like to mention a few of them. One is very big, is in the smart city area, where we are presenting a new EV charger station made by with the SECO product inside, both on the edge computer and as a clear platform, in a very big conference next Monday in San Diego, together with Intel and another company. So this will be a big trend in the future 3-4 years, because I would expect to sell a lot this such of solution. There is a huge demand in EV charger station solution. Voting machine is for sure another niche where we will grow a lot, because we got a very big new customers that will start with a big program next year. And this is the South Americans player, of course, is the number one over there, but it's very well positioned around the entire world. And the last, but not least, we are getting a lot of traction into industrial field with the acquisition of 3 big new customers in Europe and 1 in China. So we have a strong order backlog. The strong order intake, you can think that only in August, which is not a strong month at all, we was able to collect around 17 million of new orders, only in August, and September started extremely well. The majority of our customers will order for the entire 2023 because they are scary about the supply chain issue, and they would like to put down all the orders for the entire 2023 and before the end of the year. So I would assume that we will be, by the end of the year, having at least 80–90% of the total 2023 growth path in our book already. So I think the visibility on the 2023, this is one of the few positive consequences of the shortage, but is increasing.
Thank you very much.
Thank you, Anna, for your questions today. We now go to Titus Zarowski from Goldman Sachs. Please go ahead, Titus, the floor to you.
Thank you. Hi, Max. Congratulations on your results. I've got 2 questions. One on M&A. How should we think about your M&A strategy? And are there any balance sheet limitations given your leverage? And my second question is on Olivetti Telecom Italia partnership. Given that KKR is out of the picture now, how is the partnership progressing? Are orders coming through? And what sort of contribution should we expect this year and in 2023? Thank you.
Thank you to you. Starting from Olivetti Telecom Italia, you are right. The KKR deal is over, and we was able to return back with them and discuss business. Actually, we have with them good program on the PNR, which is the European program for innovation and digitalization. And we see also important programs that are coming from their network. So I would expect to see impact from the partnership starting from the 2023. It's too early now to define exactly the dimension of the impact. I will be more specific for sure on the next quarter call, but the work is back to the normality, and we starting to see signal of traction in this partnership finally. On the M&A side, I would like to say that 2022 we will be focused on executing our internal plan and execute and deliver what we are focused to make, hopefully to beat the guidance or at least to achieve it. That's our plan, to improve the cash flow generation. I think 2023 we will be in a very good position on balance sheet wise. At that point, we can have a space to manage an M&A. I have a target on my table, which actually I am very interested in. Couple of them, one in the hardware space, another one in the software space. We should choose one or another. They are all the 2 in US, and I will be focused on them later on we have a good discussion in place. I don't want to accelerate too much the discussion right now, but I think into the 2023, we will find the good windows to try to achieve another M&A deal and to continue to mix an important organic growth with quality M&A acquisition. That's all.
Thank you very much.
Thank you, Titus, for your questions today. Currently, we have no further questions. Oh, sorry, my apologies. We have Andrea De Vita. Andrea, if you'd like to unmute your line, please go ahead. The floor to you.
Yes, hello, thank you, and good afternoon to everyone. Just two questions, business model wise. One is related to, I've seen the next steps. So you mentioned two very interesting things. You don't mention anymore the App Store project. So I wonder whether the Camozzi deal with a more focus on the industrial IoT makes less compelling or postpones the project of having early next year a B2B App Store. The second point is on business model again. I have seen the C3.ai, which is moving its revenue model from subscription to consumption. So I wonder whether you can somehow or at some point move to this kind of model, or if your pricing structure is already fits your different customers according to their consumption needs. So this is the question. Thanks.
No, thank you to you for your question. App Store's plan, we already communicated it, so I don't want to repeat myself, but excuse me, because maybe could generate some doubt, which is not the case. We still plan to launch the App Store, Clea App Store by end of Q1 2023. We are preparing everything. We actually already got commitments from a lot of customers to be part of this kind of stores. So, and we definitely think that medium term speaking, this store will really create an ecosystem around Clea, providing a lot of benefits to our software business. On the business model, you are completely right. We will evolve our business model. It's too early now. This is something that is going to happen maybe in 2024 sometimes, or in 2025. Let's see when exactly will be the right time, but we will evolve. I don't want to shift the model. I don't want to mix the model, which is a bit different from what C3.ai is making, but in some way similar. So yes, that is the direction, and the right formula in my mind is a mix and combination of the two. So a combination in between a monthly fee and a fee based on consumption will be the case.
Okay, thank you.
Thank you, Andrea, for your questions today. We now go to Marco Vitali. Please go ahead, Marco, the floor to you.
Good afternoon to everybody. Thank you for the presentation. I have a follow-up on the, let's say, on profitability side. We have noted that the bulk of the improvement, quarter-on-quarter improvement in profitability was largely driven by volumes rather than gross profit. I was wondering, going forward.
Marco, I'm sorry to interrupt you. I'm not sure if you can speak into the microphone. We can't hear you very well. Thank you.
Yeah, can you hear me now? Better?
I think a little bit better. Yes, thank you.
Oh, okay, thank you. So I will repeat myself. I have a question on profitability. We have noted that the bulk of the quarter-on-quarter improvement in EBITDA margin was driven by volumes rather than gross profit. I was wondering, taking into account your previous statements on the state of the art of supply chain issues, should we expect any significant improvement in gross profit going forward over the second part of the year, or should we expect volumes to continue to be the key driver of margin expansion over the remainder of the year? This is the first question. And then the second one is a follow-up on Clea. I was wondering, we have noted a step up in the quarter pace of Clea subscription, 6 million. I was wondering which is the percentage of the NRE of this figure, and if the 6 million per quarter, it is something that you can project also going forward. Thank you.
Right. So about the second half, we will expect to see gross profit margin slightly better than the first half. So the key driver of the profitability will continue to be the revenue growth. On the second questions regarding Clea, I think about 6 million, we still have a big contribution, I should say around 3.5 million, 4 million from NRE, because we are in the very beginning of something. We are not in the end. We're still working in defining and customizing a lot of algorithms for customers. And after it, the customers start to rolling out the solution. So we have now a couple of million of recurring revenue under 4 million versus 4 million of NRE, meaning related to project. The good news is in the future, also the project will be finished, we will for sure have the benefits to transform this such of revenue into recurring revenue. And we are continuing to get new customers and new projects that are coming. So I would expect Clea to continue to stay at least at 10% of our total revenue by the end of the year.
Okay, thank you.
Thank you, Marco, for your questions today. Currently, we have no further questions queued, so we will just wait a few moments to give everyone the opportunity. Alternatively, if you do have any follow-up questions after the presentation today, please do reach out to the SECO team, as they would be happy to answer any follow-up questions you may have. So if there are no further questions, I will now hand back to Massimo Mauri for any final comments before bringing this presentation to a close. Please go ahead, Massimo.
Now, thank you to everyone on the line. Marco Parisi is always available if you have any further questions or follow-up. And have a great continuation of the day, and see you soon. Bye-bye to all.
Thank you, everyone, for joining today. This presentation will now come to a close. Thank you.